Hello everybody, this is the monthly top-down analysis of the Forex market for the month of December. Now let's have a look here at the euro dollar, the most important currency pair. So what we saw here was this technical pullback into the moving averages, what we call the snapback to moving averages. And price was held here at the 21, the most important one. Now we've had a technical reaction down, which we foresaw as well. And now, well, the important thing is now, okay, what is going to happen, right? Are we breaking to a new high? Well, first, are we breaking this bar high, this monthly bar high? So that would be the first indication for a continued bullish move, basically a second leg, right? This is the first leg, consolidation, higher low, and then a second leg. Then we should get quickly to the 200, and then we might break this last high. Well, as of here, well, we should see follow through, right? Really nice follow through, leading us to the next area of resistance. And the next area is up here, right? The 125 big number level, which is an overall very important pattern level. Or we actually see that this is a leg, right? This is a pullback, and then it breaks to a new low. So this is why it's marked with an arrow down here. As well, on the downside, there's nothing in the way, right? There's free fall territory, and then we should see price falling strongly, right? If price goes down, that means that the dollar gets stronger. So there might be some geopolitical event that we actually come down to this level. Well, this is beyond the par level, right? Very important level. And then break to a new low. We have tested the par level before here. This is not yet a stop run move. A stop run move should bring us well down here. So once price gets close to, well, be prepared for some very strong moves to the downside, or we should see moves, quite good moves to the upside. So the market will basically tell us, and currently, well, we're kind of in between, right? Now let's have a look at the euro, at the yen. So the yen across all, basically all cross pairs has shown strength. So we see a sell-off, right? Where does the sell-off go into? Well, it goes into the 21 moving average here of the weekly chart. That is a very strong uptrend. And well, price has held really well on top of the 8. That's not a very strong dynamic support, the 8, but it was strong enough to keep pushing prices higher. And once in a while, well, price comes back and tests a really strong dynamic support level, which is the 21, and this went even down to the 50. It's not that important, but sometimes, well, it plays its role as well, as we can see here. Now, one time frame high on the monthly, nothing special happens, right? We're just coming back to the 8. So this might look like a, if we focus in on here only, well, this might look like a very strong sell-off, right? Well, strength for the yen. Overall, it's actually not. It's relative, right? Relative to the very, to the weakening of the yen, this is just a small pullback, right? Let's have a look at the euro Swiss. So the Swiss is very strong, and we have seen, well, this is an S1 short pattern, hinting towards more Swiss strength. This is an important level. This I don't remember what that level was about, but that was in 2022. Well, that might have been the start of the, no, that was not Ukraine. And anyway, it's basically unfolding itself, right? Following along, like once the pattern triggered, it's following along the 21 moving average. This is a stop run level, so there's some prices shying away from the level. Well, we've got now a triple bottom. Once this breaks, and I have no doubt it will, well, then we should see a rush, right? A rush into the 92 and beyond level, basically towards the 9,000 big number level, and we could see some really big and red months as we have seen before, because this is a price action that leads to the pattern. And what we expect is, well, we expect similar move coming out of the pattern. We haven't seen that yet, right? It's more like going down sideways. Well, we'll see some vertical move here with the Swissy. Not only the Euro Swiss, but as well the other Swiss pairs. So let's have a look at the other Swiss pair, US Swiss. Once we've been here, well, we labeled that the last kiss. We have pulled back well beyond the 21, while still testing the 21 into the 50. we've got a rejection bar, a hammer, and then since then, well, it's selling off, and I've no doubt it will break to new lows. Overall, this is an S1 pattern taking its time, right? We'll see a move like that sooner or later. I'm waiting since here. I'm talking about this pattern quite a number of years now. It has not yet produced a lot of follow through, but the original stop loss level up here never. This was the first entry, right? Short. This never got triggered. So what we see here is just price action confirming this this short pattern, and this is an important stop run level, and this is an important stop run level, and we should see some price action like this here in the Swissy. Well, let's have a look at the US yen. So this is a very interesting pair as well. We have central bank intervention, Bank of Japan intervening here for or against a weakening of the yen. Well, we have seen them intervening here and here, and as well here twice, right at the same level than before. So they're basically fighting the 150 big number level. Well, this is an important level. We can see it here. If this breaks, well, we'll basically slip, right, quite a couple of steps higher. So the Bank of Japan basically, they want to produce synthetically, let's call it, manipulating basically here a double top. I don't think they will successful. Central bank intervention is only successful for a little while. What they've been able to be successful to is, well, they've been able to push price into the 21 moving average, into the 8. Well, great. Not knowing of a central bank intervention, this wouldn't be a surprise, right? So not much, basically not much going on here. But they might be able to keep price below this this cap, below and around this 150, 150 big number cap. Let's have a look at a few Swiss pairs. CAD Swiss here nicely. Well, we had a double bottom. I was talking about that. If that level breaks, we should see good follow through to the downside. Well, we didn't get that. It's a bit of a surprise that we get kind of doji like bars at this important level, breaking to a new low. So we could not produce a good follow through, a big red bar. Well, the market decides what to do and what not. It's a bit of surprise, and well, it might go sideways. We might see another pullback into the 21, into the big number, and then maybe in a second run produce a move lower. But that's a bit bit surprising. Pound Swiss. Again, this is a pattern, right? That's an S2 pattern on the weekly chart. Very important pattern. We saw the short signal. We don't see a lot of follow through. It's basically it's coming back, right? Back testing the flat line from below. This was from above. Now it's testing from below, getting some small bars, and it's basically sitting here at the big number, the gray line. The big number is the 110. And we see some nice wicks, right? So these wicks are stop run levels, and we should see some bearish move like this that should last like six months, right? More or less. Pound weakness, Swiss strength. Let's have a look at two more, which is the pound New Zealand. I've been talking about that for quite a while. I really like it, but it hasn't yet produced follow through. This is an S1 pattern short. Another S1 pattern short, and then we've got basically another breakout, and here so quadruple top. Now this time testing the 200. I think it's really stretched now to the upside, and we should see a snapback to the moving averages, and then we've got here nice stop run levels laid out, and we're basically looking as well for a move like that, right? So pound weakness, Kiwi strength, and we are at a nice position actually here right now. Let's have a look at another Kiwi pair, the Euro New Zealand. So what we have here is an S1 pattern. This breakout bar comes from the Corona spike high here in March 2020, and we are basically basically having another breakout, and it looks quite nice here, right? Once the 200 is broken lower or stop run levels, we should see a nice move coming out of this. Here a very tight stop can be applied, and these are four stop run levels, and we're looking for a move like that, right? So the kiwi, we see a lot of bullishness in the kiwi over the next years to come.